Yo, what's good boys? This is how I made $1,063 on gold buys. So when it comes to gold, I'm not sure if you saw my latest video. So basically what I was saying is that even though we dropped massively on gold, we are still in a bullish market, right? Why we are still in a bullish market? Because market is still creating series of higher lows and higher highs, higher lows. And right now potentially a higher high. So what does that mean? That means we are in a bullish trend. We are not in a bearish trend. We are still in a bullish trend despite this market drops like crazy. So what I want to identify is swing low and swing high, right? So in this case, this is my swing low. This is my swing high. So now why this is a swing low and this is a swing high? This is a swing low because when you measure the pullback needs to be at least 38.20% for it to be valid, right? So if I measure after this break of structure, market broke structure right here. Whenever this candlestick closed above, market broke structure. So let's mark it out as black. Let's type BOS. Whenever price closed here, that was broken structure to the upside, right? So after we break structure to the upside or to the downside, after we just break market structure, we're gonna measure the pullback for us to see if it's a valid higher low point. And if you measure it, as I said, it needs to pull back at least 38.20. So if I measure this one, it doesn't pull back 38.20, which means at this point I'm gonna extend the fibs and I'm gonna find area where the market pulled back at least 38.20. This doesn't pull back 38.20, doesn't pull back 38.20, doesn't pull back 38.20. So I'm gonna extend the fibs right here, and this is pullback 38.20. This is 88.6 pullback, but it is still valid. So all this is one push and all this is pullback. So these areas right here, it's not structure levels. It's just a noise, right? It's just one push to the upside on this H4 time frame. On a daily, you can see it way more clear, right? On a daily, we got swing low, swing high, broken structure. So this becomes swing low and now swing high. You can see on a daily, it's pretty much all green candlesticks. But on H4, it was a little bit of a structure, but as I said, it needs to be at least 38.20. So gold is bullish, right? So I'm gonna remove the fibs right now. And now let's highlight this previous market structure high, previous market structure low. Let's highlight it as yellow right here. Now that was my first entry, right? Because as I said, the first thing is direction and the second thing is key levels. Key level for me is either previous market structure low, previous market structure high. So in this case, this is the previous market structure high because we broke it and then right now we retest it. So this is the previous market structure high. And if I look left for new potential key levels, I cannot see any because we are trending at the all-time highs. So in this case, my only key level is previous market structure high, previous market structure low. And market tends to test these levels in the future, right? Let's say we are trending somewhere right here. Let's say right here. And I know this is my previous market structure point. I'm gonna also mark out, let's say, this level because this is some type of a key level from the past, right? But in this recent price action, I cannot look at the left because there is no key level for me to mark out. So key levels for me, again, previous market structure high or previous market structure low, depends, or some key level from the past. The stronger the reaction, the bigger, the stronger the level, the better the level, right? So if I see, for example, price doing something like this, let's say like this. What is the most valuable level for me in this scenario? So it's gonna be something like this. Why? Because the stronger the reaction, the stronger the level, the more valuable the level. Because as you can see, whenever price tapped this level, tapped this level, tapped this level, it went to the opposite direction. But it's gonna be another key level for me. It's gonna be this. Why? Because Whenever price tapped this level, opposite direction. Whenever price broke it, retest it, opposite direction. These levels in the middle, I'm not going to be marking them out, or maybe I'm going to mark them out, but I'm not going to be paying that much attention to them because it's not that strong of a level, because it's in the middle of the range, whatever. So key level for me is some type of a level where price reacted from the past heavily, and I can see the reaction, and I can see price flipping sides and going to the opposite direction. Now, for me to be able to take a trade, I need to see my third confirmation, which is lower time frame structure shift, which means whenever price is pulling back, as I said, this is a push, this is a pullback. Okay, and whenever price is pulling back, we are creating a downtrend on the lower time frames, right? So if I zoom on M30, this downtrend started whenever we broke this market structure to the downside. So price was trending down, was trending down, was trending down. Then price formed this left head right shoulder, and price broke structure to the upside. If I take this, you can see how price was trending down, then price broke structure to the upside, which means right now H4 daily, H1 and 30, all time frames are in sync, all time frames are bullish. And that's how, and that's why I took the trade. So the first position for me was this swing trade. I took a trade, I had buy limit set on this level right here, and my stop loss was under the swing low. Why I set it here and why stop loss here? I set my stop loss under the swing low because if we break under the swing low, we broke structure to the downside and we are just now no more trending bullish, right? We are bearish and the trade would be invalid. So that is the first part. Why I enter here? Because as I said, market tends to test previous market structure lows and previous market structure highs. So in this case, this was the previous market structure high, market tested it and went to the opposite direction. That was my first entry, right? And my original TP was this wick right here. I didn't close the trade right here. Price never ever like got there. Yeah, it was by few pips, literally I missed my TP, but it is what it is. I closed the trade somewhere right here. I'm gonna explain why. Now, I had multiple positions, of course. So whenever price reacted from this level and price formed this left head right shoulders pattern, what I did, I took this position and I placed my stop loss at break even, and I add another position whenever price break, retested this level and rejected this level. So I entered another position with a stop loss at the previous break even and with the target being the same, right? What I just did right now, I minimalized my risk from this position because I was risk free, I was risking zero. So I had another 1-2% of my risk to potentially scale into the position, right? So I took another position right here, and as you can see, price flew, and yeah, from that point basically price almost hit our take profit, And why I targeted this, because as you can see, this is the key level from this H1 and M30 time frame, because for me this is real like H1 structure point, this one. So that's why I targeted. I was thinking that we are gonna get some reaction from that level and then potentially go higher. So now when it comes to gold, I closed the trade somewhere right here, I believe somewhere right here. So the trade original TP was like 2.2 and 1.3, so 3.5 R, which I would make like 1.8k or something like that. But the thing is, I trailed my stop loss. I trailed my stop loss because I was like, hey, we didn't tap this level, but we came like almost to that level, like by literally a few pips, and rejected from it. So I was like, cool, if we break this structure point, I don't want to be in the trade. So I trailed my stop loss here. So this stop loss, this entry went here, and this stop loss went here. And basically, I got stopped out on my trailing stop, and I made around $1,000. What I think right now of gold? I still think, to be honest, gold is gonna go higher. I just wanted to secure some profits because it was still almost 2 hours with all of my scale-ins. So I'm cool with that, even though I was aiming for a way bigger target and potentially new all-time highs, but I didn't want to lose that all the profits, because at this point I was up almost 2k, right? And at this point it was like 1k. I was like, oh, at least I'm gonna secure 1k. I'm up 2k, so there is no reason for me to hold and lost everything, right? So yeah, that's the trade. As I said, the first entry, previous market structure high, previous market structure low. Second entry, wait for the lower time frame structure to shift, which was this break of structure, break, retest, entered here, stop loss at the previous break even. And I'm going to show you guys the screens, but I exited the trade somewhere somewhere right here, because I trade my stop loss and it got hit. Yeah. So now, what I think about gold. I still think gold is gonna go higher. But right now, to be honest, it's like 50-50. To be honest, it's 50-50. But I still think that this level right here is gonna hold, because this is still previous level of structure on this M30 time frame. And I still think this left head, right shoulder is gonna hold, basically, right? Can extend it to right here. And this is not broken, this is tested, this is tested, this is tested. So price is still testing this level. But I'm not gonna be entering to some trades like right now. I'm gonna be still waiting for price to show me, right? So since this is not broken, since this I consider this like a fake out, I consider this still like one zone. So for me to be able to buy, I need to see again lower time frame structure shift, which in this case would be break and retest of this high, right? Because as I said, H4 is still bullish, right? Daily, still bullish. Weekly, bullish, everything's bullish. So yeah, I still think gold is gonna go higher, but as it is right now, it's risky to take some play. So I'm gonna be waiting for price to break and retest this level, and then I can potentially take some buy opportunities. But with that being said, if gold is gonna do, let's say, something like this and it's gonna break it, I think we can go all the way down here. So yeah, right now it's 50-50. I think price can still hold us. So yeah, we just need to wait and see. So yeah, boys, that's the recap. That's the recap. As I said, I made a little bit over 1k. With Jay, my TP was around 2k, and I was up like 1.9 or something like that. It was so close, but hey, shit happens. It is what it is. And on to the next one. So as I said, bias still remains bullish. So I'm still be looking to take a buy on gold. So if you guys like this type of videos, let me know in the comments. I'm gonna see you guys in the next one.